Welcome to the deep dive. Today, our mission is very specific. We're going to analyze a huge strategic miscalculation happening right now in Nepal's EdTech sector. And in doing that, we're hoping to uncover this massive overlooked opportunity that's just waiting there.
It really is, and it's a classic case study, in chasing the wrong metrics. If you look at where the venture capital is going in Kathmandu, the focus is overwhelmingly on academic test prep. These are apps built to help students pass the CE or the NEB exams.
Right, the big national exam.
Exactly. And the investor logic seems to be, well, you've got 500,000 kids taking these tests every year, so that's high volume. High volume must equal profit.
Okay, let's unpack that right away. Our sources are calling this an economic misallocation. So if the volume is so high, why is this a losing game?
Because it's a textbook red ocean strategy.
Yeah.
You have far too much capital, dozens of startups, all fighting over the same shrinking piece of the pie. The real economy, the one that relies so heavily on remittances, it needs certified trade skills. But the investment is all stuck in this academic bubble. The disconnect is it's staggering.
So the pivot is critical. And that brings us to the core idea of this whole deep dive, the blue-collar pivot.
Exactly. And this isn't just about, changing a business model. It's a fundamental strategic realignment. The blue-collar pivot means shifting away from just copying Indian academic EdTech models.
Which are focused on these standardized tests.
Right. And moving towards creating verifiable, certified human capital in high-demand trades for both the domestic market and, crucially, the foreign labor markets. That is the pivot. That's where the value is.
The appeal of the academic side, though, I get it. It seems undeniable at first. You got this constant stream of new students every year.
A captive market, it feels like.
And the cultural pressure to pass these exams is immense. It feels like a low-risk bet.
It felt low risk, but it's proven to be a low profitability trap. The whole thing breaks down when you look at the brutal economics of it. Specifically, lifetime value LTV versus the customer acquisition cost, or CAC.
Right.
That's the metric that's killing this sector, no matter how much volume they have.
Okay, so explain that dynamic in the Nepalese context. Why is the LTV so low if there's always a new batch of students?
Well, the LTV is cripplingly low because you're acquiring a customer for one single finite event. A student signs up, they use the app to pass the SE, and the moment that exam is over, they churn.
They're gone.
Gone forever. So the absolute maximum LTV you can ever get is the price of that one subscription. And because the competition is so fierce, that price has been pushed down to just, 4,000 or 5,000 rupees for a whole year of content.
So even with a ton of users, if it costs too much to get each one, the whole model just collapses.
Right.
What's pushing that acquisition cost to see so high?
It's an arms race for eyeballs. With dozens of these platforms in the market, you're seeing huge spending on really inefficient channels.
Like what?
Celebrity endorsements, expensive ad placements on Facebook and YouTube, deep discount wars. Our sources estimate that for many of these startups, the fully loaded CAC is getting dangerously close to that 4,000 rupee LTV.
Or even exceeding it.
It's just not sustainable.
But wait, couldn't they survive on just pure scale, like a big retailer? Where's the tipping point where CAC just kills the scale argument?
The scale argument falls apart because there's no defensible moat. The national curriculum is public information. It's standardized.
So everyone's selling the same thing.
They're all selling the same content, just with a different wrapper on it. It's a commodity, so you can't get any pricing power, even at scale, when your content isn't proprietary.
So all you can really differentiate on is superficial stuff. The charisma of a teacher, maybe a slicker user interface.
Things that are easily and very quickly copied. A competitor can see your new feature, replicate it in a few weeks, and just offer the course for 500 rupees less.
So there's no lock-in.
Zero lock-in, zero network effect, no patents. Capital is just being burned in this endless marketing war to win a customer whose total value is already known, and it's fixed at a very low price. It's a shallow, crowded pond, and it is rapidly bleeding cash.
Okay, so if the classroom is the red ocean, let's pivot. Where is the real high-margin demand? The sources are clear. The true market isn't high school students.
No, not at all. The true total addressable market, the TAM, is defined by immediate economic need. We're talking about millions of underemployed youth, and this is the big one, the 500,000 to 700,000 people seeking foreign employment permits every single year.
A group that is highly motivated.
They are desperate for skills that generate income right now, not abstract grades for later.
And this market is all about solving a core problem. Asymmetric information. Let's break that down because it's the real key to creating value here.
Asymmetric information just means one side of a deal knows more than the other, and that creates mistrust and inefficiency. So think about it like this. A young person in a village. They have no reliable way of knowing what skills, say, TIG welding or specialized scaffolding or industrial electrical work, are commanding the highest wages in Dubai or Malaysia right now.
And what about from the other side, the employer?
The employer in Qatar has no cheap, efficient way to verify the skills a worker from Nepal claims to have. Someone might say they're a qualified foreman, but the employer has to spend time, spend money to test them.
Which creates distrust.
It creates distrust, slows down hiring, and often it suppresses wages for everyone because that risk gets spread out.
So the EdTech platform that could become that trusted third party, the one that verifiably teaches, certifies, and validates the skill, that's where the value is. You're solving the inefficiency.
You're transforming the market. And this gets us to what our sources call the willingness to pay paradox. Contrast the academic student, who's very price sensitive, with the family investing in vocational training. That family might see a 10,000 rupee academic course as a luxury, but they will happily take out a huge high-interest loan, we're talking over 100,000 rupees, if that vocational course guarantees the certification they need.
A certification for a job that could, say, double their monthly salary from $300 to $600.
Exactly. The course stops being an expense. It becomes an immediate, high-yield investment with an ROI you can see in, the first 6 to 12 months.
The entire value proposition shifts.
Completely, from abstract learning to concrete financial security. And this isn't just about remittances. Look at our own cities. Kathmandu, Pokhara, they have a chronic shortage of skilled, reliable tradespeople.
Licensed plumbers, good auto mechanics, baristas.
Right. That domestic skill gap is another blue ocean opportunity just waiting to be formalized.
And the sources are really clear on this point. In the vocational space, an online course by itself is worthless.
Absolutely worthless.
The value is only unlocked by credible, industry-recognized certification, the kind employers trust globally.
That is the core strategic truth. And in Nepal, the entire game hinges on one single entity, the Council for Technical Education and Vocational Training, CTEVT.
The gatekeeper.
They are the mandated statutory regulator, the sole arbiter of trust and quality for all technical skills.
So in the academic market, the lack of regulation destroyed profitability. But here, the presence of a strong regulator creates what you're calling an inverted moat. How does regulation become a competitive advantage?
The inverted moat is about the high barrier to entry that the CTEVT bureaucracy creates. You can't just launch an app and start teaching. To get CTVT certification for your students, you have to meet very specific, very rigorous standards.
Like what?
Accredited instructors, approved curricula, mandated physical infrastructure for practical labs, and then finally CTVT proctored exams.
That sounds like a huge headache for a tech company that wants to move fast. But once you clear those hurdles,
exactly. Once you've met those requirements, built those partnerships, no fast follower can just come along with a cheap app and disrupt you.
the moat is built.
It's a hard, expensive, time-consuming moat to build. So the first innovator who successfully integrates with that system, who manages that political and operational risk, builds a business that is incredibly difficult for anyone else to copy. They have locked in the regulatory trust.
And if we look abroad, we can see lessons from places like India with their National Skill Development Corporation, the NSDC. What does that comparison tell us?
Well, India had a similar challenge, a huge unstructured workforce that needed verification. The NSDC was set up as a public-private partnership. It focuses on setting standards and quality control, but it accredits private partners to do most of the actual training.
Okay.
CTEVT, historically, has been more centralized, more of a 20th century model focused on its own schools. For this blue-collar pivot to work at scale, CTEVT needs a modern framework, one that can standardize quality across a much wider, digitally enabled network of partners.
So the winning strategy has to respect the gatekeeper, but modernize the delivery method.
Right.
This brings us to the hybrid model. What does that actually look like on the ground?
The hybrid model is really the only viable path. It intelligently segments the learning process. The skill tech platform can handle all the theory online.
Making it accessible, low-cost, scalable.
Exactly. But for the crucial, high-value practical part, the platform doesn't build its own labs. It brokers access to the existing and often underutilized network of CTEVT-affiliated training centers across the country.
So a student learns the theory on their phone, then they travel to the nearest accredited workshop for the hands-on practice, and then take the final in-person CTVT proctored exam.
Precisely. The skill tech company isn't trying to replace the system. It becomes the aggregator, the marketing arm, and the quality standardizer. It drives high-paying, certified customers into the existing physical infrastructure. It makes the whole system more efficient and builds that regulatory moat at the same time.
So the next 2 years are really pivotal here. For anyone listening and thinking about the investment landscape, our sources lay out 3 pretty clear strategic scenarios. Scenario 1 is the default: consolidation and stagnation.
Yeah, this is the path of least resistance.
Yeah.
The academic apps keep burning cash, they merge, consolidate, and you end up with a couple players fighting over the same low-margin customer. Meanwhile, the vocational space stays informal, filled with these low-skill manpower agencies.
Which often exploit workers.
Right. And Nepal's remittance potential stays artificially capped. It's just economic inertia, and it's damaging.
Then there's scenario 2. The hybrid innovator emerges. This is the real opportunity.
This is where a visionary team just avoids the academic red ocean altogether. They focus intensely on just 3 to 5 high-demand trades. Think, solar panel installation, industrial safety protocols, certified elder care for Japan or Europe.
High-value skills?
And they forge that deep, pragmatic, defensible partnership with CTVT. They become the trusted pipeline for certification.
And the most ambitious path, scenario 3, the policy catalyst.
This is the dream scenario. The central government, the Ministry of Labor, the National Planning Commission, recognizes the strategic value of this and actively drives the modernization of CTEVT. They turn it into a flexible, digital-first accreditation body.
And that kind of policy change
It would unleash a wave of focused foreign and domestic investment into the whole vocational sector, instantly.
But the sources suggest that above all of this, above policy, above technology, the biggest hurdle is cultural.
That's the hard truth. We have this deep, pervasive mindset in Nepal among policymakers, investors, families, that just fetishizes abstract academic degrees over practical, marketable skills.
Right.
We culturally celebrate the BA graduate in a low-wage admin job, but we look down on the highly skilled, highly paid technician.
So the company that builds a billion-rupee business selling certified blue-collar skills online, they become more than just a successful company.
They become a powerful cultural catalyst. They will prove, through pure market force, that a certified HVAC technician or an industrial electrician can build a much more prosperous, financially secure future than someone with just a generic, unmarketable degree.
That cultural shift, driven by economic proof, that's the real prize.
It's the ultimate prize for the strategists who can see past the crowded classroom and focus on the vast waiting workshop.
So to summarize our deep dive for you, the capital needs to shift. It must move from the saturated academic red ocean, defined by low LTV and high CAC, to the high ROI, high-value vocational blue ocean.
And the non-negotiable key to unlocking all of that value, to solving that core problem of asymmetric information, is credible, industry-recognized certification, and that comes through the hybrid model.
Absolutely.
And if solving that information problem and creating verifiable certification is the highest value service you can provide, here's a final provocative thought for you to consider. If this hybrid innovator succeeds, what existing inefficient business model, I'm thinking specifically of the traditional opaque manpower agency, is most vulnerable to complete and total disruption?
A question that points to some profound changes ahead. Thank you for joining us for this deep dive.
Thank you.